Good morning. It's Jeffrey Christian of CPM Group. It's not quite 11:30 on Friday, the 28th of April, last business day of April. I'll talk a little bit about a market update at the end of this presentation. This is the first delivery day for the May COMEX silver contract. I want to talk today about wholesale versus retail. Before I get into that, let me give a little bit of background on something else. I've been hearing a lot of discussion about the bid-ask spreads and the resale value of official coins versus medallions or rounds, non-official round 1 ounce things. A lot of people have been buying the rounds because they're cheaper and they're more available than the common official coins that are legal tender in the countries that issue them, the Maple Leaf, the Eagle, and Philharmonic, and others. And there's a lot of talk about the bid-ask spread of official coins relative to medallions and rounds. And I'll talk about it maybe in a later video, but we're missing the point because what they're doing is they're comparing the bid-ask spreads now when everybody's buying gold and silver and demand is very strong. And what's critical is the resale price and the bid-ask spreads when the markets have turned and everybody's selling, because that's when the spreads go into the favor of the official coins. But we'll talk about that some other time. I want to talk about wholesale prices versus retail prices. And there's a lot of stuff that I guess people kvetch about the high premiums for coins right now. These two charts are from CPM Group's early April Precious Metals Advisory. They have the Premia for gold coins and silver coins and silver 100-ounce bars through March 31st. And you can see that, premiums got very high during the period of strong demand and supply disruptions from 2000 into 2022. And they've come off, but they're still at historically high levels for silver especially. There's another misconception, which is people talk about spot. You have to pay attention because what you'll hear is a lot of people say, well, this is a premium that we're charging you over spot. You have to say, which spot? There are a couple things about spot gold and spot silver and spot prices that you have to say, whose spot is that? Is that the London spot price? Is it the spot on the COMEX? Is it the spot in Shanghai? Is it that dealer's spot price? It's very important to understand because what you'll find is sometimes people say, well, I'm selling these coins at 4% over spot, but it's their spot, and their spot is different from the spot in London, and their spot is different from maybe the COMEX spot. And in terms of COMEX, we used the first nearby active contract because the spot contract, which is for prompt delivery in the month that you're trading in, April today, May tomorrow, or Monday, is the spot contract on COMEX tends to be poorly traded. So, for example, if you go back to April of 2020, you saw the nominal price or notional price of spot petroleum go negative. And people will still think and claim that you could have been paid to buy oil petroleum when it went negative. You could have, but you would have been a net payer of cash to the seller because while they might have said, well, I can sell you this for a negative $42 a barrel, I'm going to charge you $52 a barrel to store it. Or if you don't want to store it in Cushing and you want to offload it onto a truck or a train car, I'm going to charge you an offloading charge. So you would have wound up paid. The spot price being negative in oil is a notional thing that didn't really happen in terms of people being paid to take. No. You saw this years ago when there used to be a lease rates and forward curves published for the London price, and they were calculated. They were calculated based on the contango in the price, the forward spread in the metals prices, and the interest rates and a risk premium. That's the formula for forward prices and lease rates, and the components of the formula. And you'd see these negative lease rates, and people say, "Are you people really paying you to borrow gold and silver?" No, they're not. Those are notional or imaginary prices. And when the government regulators said, "Hey, you got to do something about these prices because they're not representative of the real market," the banking industry in London said, "Okay, fine, we're not going to agree. There's no such thing as the forward price because the forward price depends on the creditworthiness of the counterparts, among other things. So we just stopped publishing them." And that's the way spot or OTC markets sometimes are. The other thing is that people will say, well, the price that CPM Group or somebody else is quoting, the COMEX price, that's a paper price. It's not. It's actually a physical price. It's a price for 5,000 ounces of wholesale silver. And in the case of COMEX, the price is usually a little bit higher than the spot price because we quote, as do most people who look at futures markets, we quote the nearby active. So there's a little bit of a forward spread. Maybe it's 1 month, maybe it's 3 months. Right now, in April, it's been 1 month because May was the active contract. May is going to become the active deliverable contract as of today / May 1st. And at that point, the active contract will be July. So you'll have a 2-month spread, forward spread built into that. So the price that is quoted on COMEX is actually a physical price, and you can actually trade on that. And so too, the London fixes or replacement, the London quotes, those are for physical metal. And in fact, more than half of the trades in London are spot trades on the T+2 day settlement basis. So these are the premia that you see for coins. And a lot of people in the coin retail market kvetch about them. But let's talk about it because, again, these are coins and coins in 100-ounce bars. Let's talk about the spreads between physical gold on a wholesale level, 100-ounce bars in COMEX, 400-ounce bars in London, and the retail price. I'm using the Canadian maple leaf here. It's a little bit lower than the eagle, but it's one of the two big coins traded in North America. Now, as of today, this morning, the spot price for physical metal in 100 ounce, the spot price was $1,984. The price for a 100-ounce bar, physical bar, in the New York market was $1,994.86. So about $10 more than the spot price to have a 100-ounce physical bar to buy it. The maple leaf was being quoted at $2,052. Okay, so if you look at it, that's a 2.9% spread. And again, you can see here, it was about 4% for the eagle at the end of March, and it's less than that now. It's about 3.4%, I believe, right now for the eagle, and about 2.9% for gold. Looking at silver, price this morning was $25.67 for a 1,000-ounce bar. Spot price was quoted at $24.86. So not quite $1, about 80 cents more to have a 1,000-ounce physical bar. The retail price, if you will, for a Canadian maple leaf, I have an eagle here, was $31.51. That was a 22.8% premium. And you have to take the understanding of what that premium represents. That premium represents the retail price over the wholesale price. So if you want to talk about retail prices, yeah, the price is $30 already. But if you want to talk about the wholesale price where most metal actually trades hands, it was $25.67. Let's look at some other commodities. Here's copper. Copper yesterday was $3.83 a pound on COMEX, but that is a 25,000 pound contract. You could go to Amazon and you could buy this bar on the right for $27.95. That's a 629.8% premium for retail over wholesale. Of course, it's a prettier bar than a cathode, and those cathodes are heavy. I used to have one as a sample. Cocoa is my favorite example. Cocoa 2 days ago was $3,149 per metric ton in New York, in a warehouse in Brooklyn. If you wanted to buy cocoa on a retail basis, a Hershey's 8-ounce can was going for $4.44. I can't remember where I think it was Instacart that I priced this at. That was 56 cents an ounce, or $17,843 per metric ton. That's a 466.6% markup retail premium over wholesale. The reality of retail versus wholesale. Wheat, even better. You could buy a bushel of wheat. A bushel of wheat was priced at 62.8 cents a bushel this morning on the CME. But those are 5,000 bushel lots. If you wanted to buy retail, I can't remember where I priced this, but it was $2.49 for a 32-ounce or 2-pound bag of flour, which is wheat. Now, yeah, it was milled and processed, and all the good stuff was drained out of it to get to all-purpose silver, wheat. But that's $8 per ounce. And there's about 1,080 ounces in a bushel of wheat. So $84 for a bushel of wheat on a retail basis versus 62 cents on a wholesale basis, a 13,281% premium. Gasoline, closer to gold and silver. $2.51 per gallon for a 42,000 gallon future contract on the NYMEX yesterday. $3.77 was the average price on Wednesday for retail gasoline at the pump. That is a 50% premium. So gasoline is a much more efficient market in terms of marketing from wholesale to retail purchases compared to wheat or cocoa. And then lumber. $387 for 110,000 board feet on the CME futures contract on Wednesday. You run it one 10-foot 2x4 at Lowe's, 2 blocks from here, $5.42. That's a 15,298% markup. So it's the difference between wholesale and retail. And people who complain about that in gold and silver, A, the complaints are meaningless, and B, you can see that gold and silver are actually very efficient in terms of the differential between wholesale and retail prices. I mean, think about yourself if you wanted to be a retail investor in cocoa. Just a point to understand when you're listening to all the noise that circulates in the precious metals retail investment market. Our gold yearbook's available online. You can buy it, download it, print it, bind it. Our silver yearbook we will be launching on Tuesday, May 16th. We have the world's most accurate data. We don't jive with it to make the market look more bullish. And we have the best analysis, and we've been doing it since the 70s. Our platinum yearbook will come out on Tuesday. You may pre-order the silver book and the PGM book at our website. This Saturday, tomorrow, I will be at Rick Rule's Electric and Battery Metals Boot Camp. I got it right this time. It's boot camp. There is a $99 registration fee. It goes from 8 till 4 Pacific time. And there's the registration if you want to sign up. I will be on a panel about the energy transition and the headwinds it faces. And then I will be talking about high purity manganese. And one of the headwinds that the energy transition is, at least in terms of energy storage systems, electricity storage systems, and electric vehicles, is where you're going to get the manganese. So that's tomorrow. Should be interesting. A lot of other interesting speakers at that conference. In a couple of weeks, the Society of Mining Engineers will have its 8th annual Current Trends in Mining Finance Conference here in New York. There's registration varies, but I think for a retail person wanting to attend, it's something like $70 or $90. So it's relatively affordable. It's 4 days, physical. It's an incredibly intense meeting with a lot of very high-level mining executives. Bob Quartermain and Rob McEwen will be there, among other people. Government officials, investment bankers, lawyers, people from the Department of Energy, and CPM. I will be speaking, I think I'm supposed to speak about energy metals. I'm not quite sure, on a panel. Rohit Savat, our Director of Research, will be speaking on precious metals. There's the website link if you want to register. It should be a very interesting event. It's at the offices of Sterling and Sherman legal firm, which is one of the best law firms in the country. We have worked with them since the 80s on various mining deals. And of course, you can go to our website and read about other stuff and sign up to receive some of our work. That's all I have. Enjoy yourself, take care of yourself, and take care of each other. As Jerry Springer used to say, and try to do something good for the world on the weekend. We'll talk to you next week.